why some of these companies might be utilizing this service for those who may not know. The more you know.
Move-in day is stressful enough. If even one student shows up and there's no mattress, the whole experience falls apart. Bad reviews, hotel costs, and a lot of scrambling. Inspections miss mattresses all the time, and local stores rarely carry the right size. That's why student housing pros rely on studenthousingmattress.com, powered by Jameson Bedding. Their US-made mattresses ship quickly anywhere in the lower 48 and include the durable blue vinyl models everyone in the industry knows. Stay ready for move-in. Visit studenthousingmattress.com to learn more.
Well, what's up, everyone, and welcome to the Student Housing Insight Podcast. I'm your host, Wesley Deese. I'm also the CEO of Student Housing Insight. If this is your first time joining us, we are a platform for off-campus student housing professionals to network, share ideas, as well as data. You can find out more about the platform at studenthousinginsight.com. In addition to this podcast, we also host the industry's monthly webinar for the U.S. called Shop Talk. Each month, we provide legislative and policy updates that are impacting our industry. Shop Talk also provides a monthly overview of pre-leasing data on a national and a regional basis, along with a panel of operators who provide their on-the-ground observations. And we also typically provide a topic of the month as well. So a lot of great information. And if you are involved with the operations of student housing in the U.S., you should be registered to receive our monthly invites. You can register to receive those as well as review prior Shop Talk webinars by going to shoptalk.info. We'll also provide that link in the show notes. Well, this is our monthly wrap up of February 2026 of all the news in student housing. And joining me, as always, for this special episode is Gretta Dare. How are you?
I'm doing great. How are you?
We were going over the news for this past month, and I was like, you know what? It's kind of been slow, but it has not been a slow month at all as far as work that I've got going on. How about you?
Oh God, no, not even a little bit. Not at all.
Well, let's jump into it. I do want to mention to everybody, make sure that you're going to our events page. Let me actually just share that really quick. Because we've got a lot of conferences that are coming up. In fact, the episode that comes out probably in tandem with this one is going over the conference preview. But we've got a lot of great things that are coming up that Bisnow is doing this spring, as well as, of course, Interface happening in August, in late March, March 30th through April 1st, which is the big student housing conference that Interface puts on each year. And then we've also got Bonard is doing their annual Canadian Student Housing Summit in Toronto on May 28th. So not only are these all listed on our website, so if you're ever looking for, hey, what events are happening within the student housing industry for the US and Canada, we list them all, or try to list them all on the website. If we've missed one, please let us know. We'll make sure to get it up there. But we've got arrangements with both Bisnow as well as Bonard and anybody else that wants to provide a discount to our audience. So important to go there and get the discount code and save a little bit of money on your registration. So, you got any conferences in your future, Gretta?
Well, hopefully, Interface, since I still have not purchased my ticket, which means I don't get to stay in the hotel. And that is the saddest thought in the entire world. But that's really all that's on my mind at present. It's about as far ahead as I can see.
Yeah, there's a couple of hotels that are really close, so it's not that bad.
There are, yeah. And it's not the first time that I've had to do it. And that's really what I get for waiting until the last minute. 2 years in a row now. So that's on me.
Well, that's why as soon as the email comes out that they've opened up the room block, I go and get it, even though I haven't registered yet. And
Honestly,
And
that's what I'm
typically,
gonna have to start doing because I cannot do the whole different hotel thing. It is not a thing that I am exceptional at. I need to be able to know that I can just go upstairs when I need to, and like that's a very real thing in my life. So
yeah,
yeah,
yeah.
yeah.
Well, the only thing is you end up reserving it for only the nights you think you need. And then, like what's happened to myself, I'm now going in on Saturday night. And so I've got to stay at another hotel and then move over to the JW.
Uh-huh.
So there's that too. But yeah, looking forward to it. Looking forward to seeing everybody there. So let's jump into the news. Something that came out this week. We are recording on the 27th, and something that just came out this past Wednesday with the student housing business email blast that comes out on Wednesday. If you are not subscribed, make sure that you go to studenthousingbusiness.com and subscribe.
Yeah, how are you not
great
subscribed? What are you doing? What are you doing with your life?
Exactly. So here's the big news. Last month we had Jason Ford on the wrap up episode to talk about the news of asset becoming the number one in the top 25 list by a pretty wide margin. And we made a lot of comments about how there's so much more. As far as like the top five, they're just so much bigger. And a lot of that has been done both with Asset and Cardinal in providing these we call them white labels for ownership groups that say, hey, we either don't, want to manage everything that we need to have, as a management company, as a top tier management company. But we've got, some folks that are operating our properties that we want them either in charge of just marketing and leasing or some portion of operations, and they use those companies as kind of a back end accounting and technology group to help them with that. So that's helped those numbers as well, because they're reporting those numbers as being managed by those firms.
Well, and just so that, because I think I had this conversation, and like I don't want to Kanye cut you off here, but for I'm gonna let you finish. But for people who, have heard white label or the back end or all of those types of things, or, because there's companies like Centricity, but I did have this conversation last week with one of the other members of my team who was asking about what all of this meant, or, didn't fully understand this concept in general. And so I was kind of breaking it down for. And because I don't think that everybody knows what it means or why a company would use it or why it makes sense. And the majority are a lot of different software services, payroll services, all of that, in order to
Property
even
insurance.
there's a minimum point of entry to even gain access and or to get the best rates for a lot of this. And so like if you're talking about insurance, if you're talking about something like that, then you're going to get access to, a lot better rates for your team members. If you're talking about gaining entry to a lot of software services, they're not going to accept you if, you have a smaller portfolio unless you have a minimum number of beds or units. And so when you are kind of attaching yourself to these larger companies, you're gaining access to things that you otherwise perhaps would not. And so that's where a lot of these types of services do come into play. For those who may not know what this means, that's really where, and maybe it's because you're building up your portfolio and you're just not quite there yet, or, where whatever the reason might be, that's why some of these companies might be utilizing this service, for those who may not know.
And kind of that last point that you made about, they're getting started in student housing, and they maybe they've got a portfolio of multifamily or commercial, and they kind of need a team within student housing, and so until they grow to a point where they can split off. And that's exactly what we've seen from the LV Collective this past week. As headline came out on February 24th, LV Collective launches in-house property management platform. LV Collective has launched a fully integrated property management platform, formerly bringing operations in-house as part of the company's next phase of growth. We will provide the link in the show notes if you want to go read that. But I think they're up to 11 or 12 properties now. So I don't know exactly what number LV in this story doesn't state exactly how many beds they've got. I'm assuming it's somewhere between 5 and 10,000. So congrats to them for being able to step out on their own and bring that in house. And also there's, comment in here from the CEO of Cardinal Group as well, congratulating them, and big moves for both companies, and congrats to Cardinal Group for helping LV Collective do that. So.
Well, it's always really exciting seeing another company come into the space. I always get very excited about it. One of the biggest things that I've talked about is I think that we do better as an industry when we're less homogenous, when we have more options in general for everyone to be looking at and comparing each other to and getting ideas. It's that whole rubbing of competition. And I think that we do better when we're like that. I think we're kind of forced to reconcile, everything against each other. So I think it's really wonderful. Also, I'm going to make fun of myself because I'm surprised you didn't. And to point out the fact that when I first read that headline, I thought it meant software. I thought that they...
You're not the only one. There's been other folks that mentioned the same thing. I was like, tell me in there where you saw anything about software or technology.
Platform.
I did not.
I saw platform. I read that as I was like, and so I literally went to the website. Wes and I are sitting here and we're going through it. And I'm like, oh, they have a software engineer. I was like, okay, I understand. That makes sense now. He's like, why are you looking at it? I was like, because they have their platform. He's like, Greta. I'm like, oh, yep, I see it now. I see where I made my mistake. They
do have a software engineer who's got a very impressive background. So I am interested in seeing where that might be headed.
And I love that. Find that very exciting, regardless of the fact that I'm a giant dum-dum and completely misunderstood the entire news, which is still very, very exciting.
Yeah. Well, this is the second white label in the past 4 or 5 months that we've seen separate off from Cardinal Group, and the other one was Capstone Management Partners, Capstone Development Partners, which was acquired by Lincoln Company. And just to give you guys a preview, or not a preview, but tell you about something that's coming up. I'm going to be sitting down with William Davis with Capstone Development Partners, and as well as their EVP John O'Harris at Lincoln Company, and we're meeting in Atlanta. We're going to be in a studio talking about what's ahead for them, what they've got planned. We're excited to hear about what's coming up with Capstone Development Partners. So stay tuned for that one.
That's fun.
Well, hey, next thing I think we need to talk about is, Shop Talk. We went over kind of year-end numbers that College House has been tracking, and where this is kind of the time of the year where everybody comes out with either their end of year or end of first quarter numbers. And we've got some from Yardi Matrix that I think you wanted to talk about a little bit.
Yeah. So I knew that going into this year was going to be really interesting. I always enjoy tracking the data. It's like my favorite thing. And so kind of watching to see how this year progressed going into it, especially after talking to, everybody that we are part of or friends with in this industry, like seeing how it all played out. As it continues to play out is going to be interesting. So obviously pre-leasing for the 2026, 2027, currently it hit 52.3% as of January, which is ahead of last year's final January estimate of 45.6%. It does sound great on the surface, but last year's January was initially estimated at 54.6 before settling lower. So the early read comes with an asterisk. Virginia Tech is actually the highest. It's doing really incredibly at 88.2, Missouri at 84.1, James Madison at 82.7%, and Georgia Tech, Illinois, and Auburn all pacing 10% or above ahead, which is really outstanding. Now, we do have some that are much lower on the opposite end. So we're looking at Purdue, Tennessee. Those ones are more than 10% behind. Now, if I do recall correctly, I think that Tennessee was also trending lower last year, and so was Purdue. I think that those were, but I would have to go back and double check, to be honest. Now, what's really interesting is rents. Uh, Average rent per bed is $915, down 2% year over year. Rent growth has averaged just 2% since October, compared to 3.6% same period last year and 6.6% 2 years ago. So nearly half of the Yardi 200 markets posted year over year declines. The most dramatic swings were Arkansas, which went from 10.3% to negative 9.2%, and North Texas from a positive 7% to a negative 9.9%. So really, this kind of puts us in the perspective of what we've continued to talk about.
Can I ask just a
Go
quick
ahead.
question? Quick question. Do you know if those are in-place rents or rates that they're pre-leasing at?
So those are going to be rates that they're pre-leasing at. These are all based
Yeah,
off
it says for the
pre-leasing
26-27 academic year.
Yeah.
Yeah. Has averaged 0.2% since October 2025. We had the February shop talk back on the 17th, and we provide year over year from College House, and it's about a 3.2% increase year over year is what they're tracking for pre-leasing rents. But I don't know if it's the same metric. I'm curious about that. We'll have to figure that out.
So one of the things, and this was actually, again, and I may bring this up a couple of different times because just so that it reaches, multiple people over and over again. This was one of the topics that I discussed at LeaseCon, and it was the differences between metrics when we're talking about the real page data that gets put out, the Yardi Matrix data, the College House data. And again, what we're talking about is what everybody calls a lease, at what point, and really at what point does it become hardened data, right? And it's additionally, when we're talking about Entrata specifically, and if everybody, especially the people who were around when Entrata was still property solutions. And when we first gained access to it, there was, at what point will you call it a lease? At what point is a lease a lease? And that was really kind of the first time that we were given access to that question, and basically being asked just at what point that's going to be reflected on a report. Prior to that, and especially if you're from the multifamily world, it's a lease is a lease when your manager signs off on it. That's when you get your commission. That is when it counts on a report. You don't even report it on your daily or weekly report until it's actually executed. It's always pending until then. And so the thing is that inside of Entrata, it's something entirely different. There's multiple different stages, and every single company is going to report it at a different point. Then what happens when it gets canceled? So that's something completely different as well. How is that being reported on your reports? And then finally, it's how are you actually tracking your concessions? Are you just lowering rents inside of the system? Are you adding concessions inside of the system? How are you doing your rents inside of the system? And so that's something entirely different, again, that we do on the student side. And again, something that company to company will do differently inside of Entrata as well. So it is difficult to really kind of get these data points in a really consistent manner and to know them really specifically. They're always going to have a delta.
Yeah. All these student housing projections through pre-leasing, especially when it comes to rates, I don't know. It's a grain of salt, right?
Yep.
Anything else with this report? I'm sorry, I didn't mean to interrupt you on that. But
I saw you go into a whole thought process. Really not necessarily with the report. However, that's in the same kind of thought process that takes us kind of with, even though like student housing, with the way that things have going for the last several years, we do, because of the pre-leasing, a lot of people did see pre-leasing slow down last year. And so they shifted. And that is something that our industry typically is so great about, is recognizing when things do need to pivot and pivoting quickly and efficiently. And so the reasons why we are particularly likely seeing those rents shift is because it was necessary in order to be effective within each market. And so even though that might be happening, they are still getting those occupancy and pre-leasing numbers, which is the important factor to keep in mind, because without meeting those occupancy numbers, then we're not meeting our requirements, right? And so the good thing is that with that happening and with those strong numbers last year, year over year, we are saying, and even though we did mention this on the podcast last time, that while we don't typically get into the financial markets or financial demands on this podcast, it is something that does indirectly impact all of us and all of our teams everywhere, that because we have been doing pretty so consistently well over the years, that we are seeing a lot of all of the financial markets coming back into the student market overall. And that's actually really, really exciting and does positively impact all of us when we see the major financial institutions start coming back in and opening that money back into us. So this was actually the question of the month that was posed in the January-February 2026 article.
Student housing business.
Yeah, student housing business. So again, I always go through the
you read every word.
Mags, I do. I go through every single one. And this one I thought was really exceptional. This is one that, again, that deeply impacts everyone. And seeing that money is coming back into our industry is wonderful. It's been something that I know has been stressing everyone out. So I was really excited to see this. So congratulations and yay to everyone. Yay. And that was really it. I did want to mention that at the tail end of all of our overall metrics and numbers.
So, should we go to some policy and legislative stuff?
Yes.
So, not a law yet, but we've been kind of following this act, 21st Century Act 390-9, has now passed both the House and the Senate. We'll talk about if Trump's going to sign it here in a moment. But do you want to give us a quick rundown of what this is covering and why it's important to us?
Yes, absolutely. So this one I feel like it's very exciting for our industry. It also touches on some stuff that we talk about often and I think has a really positive impact on different areas in general. So it's a rare bipartisan moment. The House passed the Housing for the 21st Century Act 390-9 on February 9th. It incorporates parts of 43 pieces of legislation.
Oh, I read that. I thought that was the number. So that was the vote.
Oh, yeah, no, that was the vote.
That makes total sense now because there's
so it incorporates 43 pieces of legislation. The Senate has its counterpart, which is the Road to Housing Act. Key provisions that are relevant to student housing, so our sector in particular, $100 million pilot for converting vacant commercial buildings to housing. So this part I'm very excited about. A $200 million annual innovation fund rewarding communities that adopt pro-housing zoning policies, streamlined NEPA, I don't actually know how I'm supposed to pronounce that, NEPA review for infill development and improved FHA multifamily housing or financing. It also includes guidelines for single stairway residential buildings up to 5 stories, which is significant for density in student housing. So this is the first real bipartisan housing legislation in nearly a decade. The single stair provision alone could unlock development sites that weren't pencilable before. So very exciting. And like you said, we obviously haven't had it seen it signed into law yet. However, it did pass both the House and the Senate, which is very exciting, just for very specific areas that do directly impact us.
Yeah, we've got a couple of quotes here in this article from Urban Land covering it from our friends at NMHC. Overall, this is a really good first step to address the housing shortage, said Matthew Berger, Senior Vice President of head of policy for the National Multifamily Housing Council. It's important to bring the process to a bipartisan conclusion through reconciliation of the two bills. And then also from, and this is, I love that they had this picture in here because we've been talking about specifically in California, the need for, and some things that have been done there in order to allow developers to more quickly convert commercial properties, office buildings into student housing. And so they've actually got the Rivermark Center. That's an office building converted to apartments in Baton Rouge. I don't think that's a student property, but interesting that it's in Baton Rouge.
Down in Baton Rouge.
And we've also got a quote here from our good friend Dave Borzos, Vice President of Capital Markets Vice President of Capital Markets and Student Housing at the National Multifamily Housing Council, highlighted several provisions in the legislation with implications for developers, including an increase in the per unit loan limit for FHA multifamily loans. Borzos believes this change may have the largest impact on developers of both affordable and market rate apartments. He said, in our experience, many programs are outdated and lack a provision to increase loan limits based on rising costs. They hold back apartment developers from being able to use the programs because of unadjusted limits that don't align with the high per unit cost. Great job for NMHC and that this is what they do. They work with the folks in DC to get these things passed. So just wanted to call them out.
Very exciting.
So speaking of the DC area, and specifically the College of, or not the college, but the University of Maryland in College Park, Maryland. There was some news there earlier this month that I've kind of been covering on LinkedIn, and we also covered it a little bit on Shop Talk, and that is a new law that the city council passed. I should say ordinance, not a law.
I was like, see, now you're just throwing laws around.
Just throwing laws around. But yeah, a new ordinance that came because there were some students who voiced their concerns about having to deal with renewal offers that were essentially coming in the same day that they moved into their new apartment. And this new ordinance now requires that landlords wait 180 days prior to the end of the current term before they can offer a renewal. I've got a lot of thoughts and opinions on it. We'll get into it, but I want to go ahead and play this new snippet. There's two snippets that are out there on my LinkedIn. This one is the one with the student perspective because I felt like it was the most relevant. There's also another one that is kind of breaking the story that you'll see out there as well. We'll link both of them in our show notes, but let's go ahead and play this.
Inside of her off-campus apartment that she shares with 4 roommates, Abigail O'Lear, a senior at the University of Maryland, says that she's been thrown through the ringer over housing.
The places that I've lived in have pressured me to renew within the first month, even sometimes within the first week of me moving in.
She says that practice now barred from happening in College Park, Maryland. City Council passed an ordinance Tuesday saying a landlord shall not make any renewal offer earlier than 180 days from the end of the current lease. Anyone across College Park, including students who typically sign one-year leases in August, they're not going to be subject to lease renewal offers until February, for example. Certainly a change in operation.
Quick thing there. I've just got to pause. Did you notice he said they specifically sign their leases or typically sign their leases in August? No, they're not signing their leases in August. They're moving in August. Mm-hmm.
Within leasing offices.
What do you say to the landlord to say, hey, listen, we should have the ability to do this?
I think it's just a little bit ridiculous because if they want people to renew, it's leaving a bad taste in my mouth. If you want to search for something different or if you want to renew, you don't have time to make that decision because they're pressuring you and saying that they're going to give away your apartment if you don't sign right this minute.
I think this is a necessary correction.
Sean Wollums with College Living, a local property management group, says he supports the new restriction.
And as a small landlord, this does impact us. But generally, I think if you're small landlord, big landlord, if you care about your tenants' experience and you want your tenants to be happy, you generally shouldn't be pressuring them into renewing a lease.
UMD student advocates on city council hope their work can be a model for other college towns and beyond.
It's not just the state of Maryland, but for other states as well.
Now you have a lot more time to make very important decisions when it comes to housing.
Property owners that violate the new ordinance, a fine no less than $500 for the first offense, no less than $2,500 for each additional offense. In College Park, Maryland, Ben Dennis, DC News Now.
So my initial thoughts, and I also, sent out something to the city attorney for College Park to ask them to come on the podcast to help explain to landlords as well as to students about this ordinance. And don't hold your breath. I haven't heard anything. I doubt that I will. But a couple of things I'm going to say up front. If you're operating in College Park, make sure that you're getting your lease reviewed. Make sure that you discuss with your attorney, what the options are here. But this was so short-sighted because all they're doing is basically they will be forcing landlords, because 180 days prior to the end, you're talking about sometime in mid to late February. By the way, this went into enforcement on February 24th. So it's not really impacting this year or for fall 26 lease up. But, if I'm a landlord in this situation, I'm just now going to be giving everybody notice as soon as they move in that, hey, we are not giving you a renewal offer. You're going to have to basically get in line with everybody else that's leasing. If we still have in February or in March, if we still have renewals that we can offer you, we'll be sending them out to you. But otherwise, consider your lease terminated. And if you want to lease with us for next year, come see us.
So here's the thing that's fascinating to me is it would be one thing if the entire student industry didn't run on, or if any market did not run on one cycle. If all of the leases did not start and end at the exact same time. So one of the key statements that she made is, we want the opportunity to go look at somewhere else to live. Okay, but dear prospective resident, in order for you to go, so say that we have those 5 communities as options off campus, and of those 5 off-campus communities, if all of those places are sitting there unable to find out what of their residents are going to renew and what of their residents are not going to renew, they can show you a tour. They can be like, yep, but we don't know what our availability is going to be because we can't find out who's going to renew and who's not going to renew. So you can fill out an application and we can place you on a wait list in February. And then
that's what I'm saying.
And then you can come lease at the exact same time that everyone else will be notifying us of their renewals. And that's what we were talking about, was that then you create the big squeeze where everyone in the entire market is now leasing, looking, and renewing all at the same time. And guess who's going to benefit from that, baby? We are, not you, because you're all looking at the exact same time. Instead of it being spread out where we all compete for you like the crazy little banshees that we are, you've now crammed it all in right before you have to actually graduate and leave. So February to May, May 17th or 15th, whenever it is that you're going to be leaving, May 6th, you have just a couple of months to scamper around and potentially find a new place or determine if you want to even renew, if you're given the opportunity to renew for however long you've got, if they even decide they want to offer you a renewal. Like it doesn't offer you any type of safety net in any capacity, because now every single student in the market is doing the exact same thing that you are.
Yeah, and that's an interesting perspective. If it was to roll out that way, and you're essentially talking, there's 24 to 27 purpose-built student housing properties in College Park.
It was just easier to say 5.
And
we operated in College Park. You and I both know how many there are.
If you could get everybody on, all 25 of those, let's say there's some that's got multiple properties, maybe it's 20. If you could get all of those operators on the same page to just say, hey, let's just don't bother our residents and our students with any of this. Let's don't do any marketing. Let's, tell our investors, hey, I know we've been tracking this pre-leasing metric, starting in September, going all the way to next August. We're just going to put that on hold until February, March. And we'll just, if you could get every operator to agree to that, which will never happen.
Sounds like collusion.
It does sound like a collusion, right? But apparently for the benefit of the students, then I could see how that, that could happen. But the truth is, everybody's going to go after, even if they don't term the residents when they move in, if they go out and immediately they're going to start pre-leasing. I mean, they're not going to be able to convince their banks and their investors of, let's just sit back and wait for us to offer something to our renewals first, because those are our residents. They're really important to us. It's just,
in reality, though,
terribly short-sighted.
From like a financial and an operations perspective, it almost does make the most sense to just go ahead and do it that way, though. Because if you think about it, you do kind of want to keep as many current residents as you can and create that big squeeze. Because if you can still keep those residents, you have less units to turn. We know that turn costs can be one of our largest expenses. And then if you create that big, like that squeeze, you create that scramble, then you're still keeping your residents. You create a flush in the market, and it becomes your market. That's, again, they're not thinking this through at all. And now you have all of the students compressed in that time period, and you're just like, you don't even have to offer incentives. You have all the students all out at the same time, all looking, and you're just like, okay, stay where you are, and here's what your options are.
Well, this is College Park isn't the first place to do this. This happened in Ann Arbor. It's also happened in Minneapolis. In fact, while we were on Shop Talk, and we had a turn panel.
Minnesota, not just Minneapolis. It's the whole state of Minnesota.
Okay. Well, Sam's from Minneapolis, so and has worked in that market, so that's what she was discussing. It's kind of the same thing. It came out, kind of similar to the same ordinance, and it wasn't thought through very well. And there's things around it. I'm not going to get into how the city could have done this a little bit better, but I do want to come back and talk about the other side of this, because I've now been in this business for 28 years. We've never had students that were going to their local town council and saying, hey, we really want you to do something about this. By the way, I've got a question. If you're an operator in that market and you sent your property manager or regional manager or your attorney or whatever to this meeting, I would really love to have a conversation and find out what was actually discussed from the landlord side. The other news article mentioned that there were a handful of landlords that were there. But they obviously didn't speak. They only had that one guy that you saw there with, that's actually a local operator that was there. So I'd like to know that. But I think it's time for an honest conversation because this has just been a more recent thing, and it's come on the heels of what we started seeing. Certainly, I would go back to 2012ish, but it heavily accelerated after COVID, of trying to get people to sign up as early as possible. There was a day where we didn't send out, we sent out renewal offers basically right before Thanksgiving, so everybody could go home and talk to their parents about it and say, "Hey, do I want to renew?" I know I'm going to get a lot of pushback of, well, that's just not the day that we live in anymore. We pushed this on ourselves. We said, "Hey, we've got to go out and beat everybody else. This is now highly competitive." I could kind of see that in more of the metro urban markets, like a Charlotte, like a Denton, Texas, where you've got, a lot of other non-PBSH options that are also going after the students. Other kind of traditional land grant universities where, it's only student housing or majority student housing. I don't understand why we're pushing them so early.
Well, and that's, you and I have a mutual that's literally the day of move-in. They were pushing renewals so hard. I think that they were like 23% renewed on the day of move-in. So that, was like, that was a thing. And that was, I've never personally done renewals on move-in day. It's just not a thing that we've done. And it's also, you and I.
If you're going to do it, why don't you just convince them to sign a 2-year lease? I mean,
yeah, you're right. That's the thing. We've done 2-year leases. You and I have done 2-year leases. I think we did them in like Tuscaloosa. I don't remember why, but it was, that was the same concept. And that's something that just like, if it makes sense for the business, you do it for the business. I offer 2-year leases. Again, if it makes sense, that's, it makes sense. But, it's with the renewal offers, like for instance, for, in the USC market, that's where when we offer them out, they still have the option to renew after the initial offer goes out. And we were talking about this previously. It's that at a certain point, they're not being offered our renewal offer as it goes out. It's a special, but they can still renew at any point after that. It's that they're getting, whatever anyone else is. And so that's the difference there. So I think that, I don't know, I think that there are different ways to go about it without a doubt.
Yeah. Yeah. I could see some kind of first right of refusal clause or something like that being required in a lease, but it's.
Yeah, I don't know, because I keep going back to this Ann Arbor one, because Ann Arbor went hard with theirs. That was the other thing that we were talking about, that they like shaped it after Ann Arbor, but Ann Arbor did go hard on theirs, but that doesn't surprise me either. Ann Arbor's different. I feel like anybody that operates in Ann Arbor knows that, because those kids are also different.
I've never operated in Ann Arbor. It's one of the few places I haven't. So I'll take your word for it. I have done other stuff in Michigan, but not Ann Arbor specifically.
I can tell you that Ann Arbor and East Lansing, very different, completely different.
I've heard.
Yeah.
I've heard. Well, I would love to know everyone's thoughts on this. So if you're watching this on YouTube, would love to see your comments. Go check that out.
Follow and comment below.
Well. Yeah, a lot of people are giving their thoughts on that LinkedIn post, or tagging people that they know are working in the College Park market. So yeah, any other thoughts on that?
No, I am very curious to see how this goes. And I definitely do want to know like what people's thoughts are in this market and how they're going to be handling it. So I'm with you on that. I want the thoughts. I want the thoughts in your mind.
Well, hey, that does it for this episode. I don't
under an hour.
I don't know that we've got, like I said, it was a slow news month, but I know everybody's working hard. So hopefully we help bring a couple things to light that's going on within the industry that maybe you didn't know about. So
yeah, hopefully everybody's leasing is going exceptionally well as we're heading into the spring season.
Yeah,
Little
it's going to be
springier step.
spring break here in just another week or so.
Yeah.
Well, Greta, I hope to see you in Austin. I don't guess we'll be doing another one of these until then. Guess we need to talk about that schedule because typically we do it like the last day or two before the end of the month.
Oh yeah, because it's on March 30th. That's really
maybe
throwing
we should
me for the loop.
Yeah, maybe we should record at Interface.
Oh.
Speaking of which, let me make sure everybody is aware. We are doing a brunch. We're calling this our Shop Talk Link Up at Interface. We've been doing a networking brunch and recording a live podcast at Interface for years now.
The food's really good.
We wanted to give it a branding, so we are calling it the Shop Talk Link Up at Interface, and we're going to be doing some other link ups. It's a new event category that we've come up with our ambassadors, and the plan is to when they're getting together in certain cities, and it would be great to actually have something formal to be able to call on other student housing folks that are in that same city or that same campus community and have dinner. We'll have it sponsored by some of our great partners, and take advantage of that. Make sure that you're paying attention to the events page on our website at studenthousinginsight.com and find one that's coming to you. Greta, thanks so much.
Thank you, sir.
All right. Take care.
Bye.